Before we get started, we wanted to thank Liberty Mutual Surety for sponsoring this episode of Let's Get Surety. Liberty Mutual Surety provides contract and commercial bonds for all size companies and contractors around the world. Liberty Mutual is here for you today, tomorrow, together. For more information on Liberty Mutual's breadth of surety products and solutions, visit www.libertymutualsurety.com. Now on to our show.
You're listening to Let's Get Surety. Let me hear your bonding talk with Kat Shamapande.
Hey everyone, it's Kat Shamapande. Thanks so much for joining us for this episode of Let's Get Surety. I have with me today my co-host, Mark McCallum. Hey Mark, thanks for being on.
Absolutely. Hi Kat. Thanks for inviting me back.
I always feel graced by having the CEO here at NASBP on these podcasts with me, Mark.
Well, thanks.
So today I'm excited about the topic we're talking about. There's so much with surety that goes on working with federal agencies and state agencies. So we're going to be talking a little bit about how you can work with state agencies on bonding. And to do that, we have with us Corban Enns. He's the area president and director of surety at Gallagher Affinity Insurance Solutions. Hey, Corban, thanks for being on.
Hey, Kat. Thanks so much for having me. Mark, good to see you again, sir.
Well, before we dive into this topic, Corban, can you just tell us a little bit about yourself and about Gallagher?
Yeah, you bet. Thanks, Kat. So I got into the world of surety at about 24 years old when I did some research about some innocuous product to see if it actually might have sustainability for a career. So it all started back in the world of New Zealand when I met a girl, and in chasing that girl, I landed at a law firm where I discovered the product of surety, and doing some sleuthing and due diligence, found out there's a lot of bonds out there. And sure enough, there is enough financial stability to actually support a young gentleman at that age. And so I jumped in both feet, and I tell you, ignorance is bliss. If I knew how hard it was going to be or any kind of amount of the work, I started a scratch agency at 25 with no surety background whatsoever, and I have not looked back since. In 2019, I had the privilege of being able to join Gallagher. So I sold my insurance agency, Surety Solutions. And after about 16 years of running that operation, joining with Gallagher was a great opportunity. It was a great furtherment of my career, and I got to join some fantastic team members, across the globe. Obviously, an independent agency over in Salem, Oregon is very different than the third largest brokerage in the world, a publicly traded company with 40-some thousand employees across the nation. And so it's been a great opportunity to learn and to grow as a professional, but also as a surety professional out there in engaging more connectivity with obligees and other producers and surety professionals across the globe. So it's been a great ride.
That's terrific. Well, Corban, you mentioned you found surety by chasing a girl. What happened with that girl? You can't leave us hanging.
Right? That's the best part of it. It took a long time, but she finally said yes. And 2 beautiful kids later. We're still married over here. I've got 2 kids, and we still live out in the Pacific Northwest. So I still don't think she knows what in the world I do with this whole surety product. But hey, it's okay.
But she's stuck and surety stuck, and that's what matters, right?
Amen.
That's awesome. So the topic we're kind of planning to delve into today is like working with state agencies on bonding. And I know you do a lot of work with state agencies, Corban, and you've got a specific story you want to share with us regarding one state agency that you worked with recently.
Yeah, no, thanks, Kat. When we think about our products, there's this beautiful blend of who's your customer. You sell something to your principal, but really the product is going to that obligee or that owner at the end of the day. And in a lot of the world where we live, we do a lot of commercial surety. And in almost every cases, those bonds are running to some kind of a regulatory body, right? In many cases, it's the state agency. And again, in the world where I play regularly, it's in the financial industry side of things. And so we deal with a lot of state agencies who are financial governances. And so it might be a Department of Finance or a division of regulation. And so in engaging with those folks for the last, 14 years or so, we had the creation of a group called the CSBS that supported the NMLS. It used to be the nationwide mortgage licensing system. They picked up a DBA in 2012, and now they call it the nationwide multi-state licensing system. But that's been a really good repository where regulators condense and group And so it's been a great place to be able to actually engage with regulators on a more regular cadence and in person, which is huge when you're trying to break down barriers and you realize maybe some of the product and procedures are just kind of an unknown experience for so many parties. So,
And Corban, what is the CSBS that you mentioned?
right. One more acronym for us to remember within the industry over here, right? It actually stands for Conference of State Bank Supervisors. And it's almost like this quasi-governmental group that gets together. But they're basically the owners of this licensing repository that I mentioned, the NMLS system of record. And so through their leadership and through their governance, this system has really been developed, it's been implemented, it's been grown. And so the CSBS is the party who really engages with industry. So they're engaging with the owners and obligees out there at the regulatory division. They're engaging with the stakeholders of licensees and all these peoples and groups who are actually being managed by this system of record. And they're also the group who's engaged with the surety industry. And so really, kind of in a unique moment, Kat, we actually have these different actors all coming together and using the same system. And so there's been more open lanes of communication that have been fostered by this group and others to create better understanding, better cooperation and partnership across the industry. And it's really made some great positive forward movements for industry at large.
So, Corban, I imagine getting that better understanding is very key. How familiar do you think regulators are just in general with the surety product?
Man, Mark, I think I would have answered that more optimistically even a couple of years ago. But in my more recent conversations, I feel like it's gone backwards. There's some really good questions that have been asked about, like, what does this bond do? And as we've had more economic challenges in 23 and such, with mortgage industries, we've seen the interest rates increase. And so we've had a lot of companies close. And now there's more questions than ever before about, like, well, what does this bond do? And what is it for? And so I think each stakeholder has their own perspective and opinion, Mark, but there's a lot of confusion. Is this a compliance obligation? Is this a performance obligation? Is this a financial obligation? And, the world of surety has a mixture of all those coming into play, but we definitely have seen a different adoption or a different perspective of what this product is meant for throughout the decades of claims history. Right. And so in New Hampshire, it was very much a financial vehicle where a licensee failed to pay something. And now you've got significant fines with interest being placed against the now closed and defunct licensee where the surety company is stepping in. Was anybody really injured? No, it was just a kind of a revenue mechanism. Now we've moved away from that. And I think our industry has done a really good job of communicating what we think the product is meant to be. And if we're not in alignment with understanding and perceptions, well, then it's going to cause an absolute default across the board. We're not going to price it right. We're not going to underwrite it correctly. We're not going to see the same kind of accessibility for different principals and companies out there in the future. So getting that same perspective has just been a really big undertaking and something I think is really valuable for industry at large.
Right. And it's probably fair to say that those who are charged with regulating it weren't necessarily those that passed the statute to begin with and knew of the intent and so forth. And like any other area of endeavor, people are going to come and go, right? So they may have lost the original intent of the requirement. So having that ability to have that dialogue, it sounds like it is so crucial to making sure that our product is understood and continue to be accepted.
Mark, absolutely. Imagine the game of telephone over the course of 30 years. You've got the original legislature and code and statutes that are created, and it's kind of with a certain intent. And then, just like you said, there's changes of staffing, there's changes of leadership, there's changes of opinion and perspective, economic changes that all really influences maybe what the initial intent was. And I feel like through the COVID experience, we saw a ton of transition within staff members. That's staff members across the board, but a lot of staff members have changed in the regulatory side of things. And so imagine now the telephone game breaking down even more over the last 3 years. And that's kind of where we are. Not to mention the fact that we kind of lost some of our points of contact of these in-person meetings. Now we've got new actors at the regulatory level and at the perception or the examination level. And so getting back together and making sure that we're not playing telephone, we are communicating these things, has been a very important endeavor to protect our industry, to protect our product, and to make sure that we're protecting our principals and our surety partners who are really putting their balance sheets on the line for this co-signing type of obligation.
So it sounds a little bit like we need to not just be reactive, but being proactive about our product, particularly in front of the regulators. So if you don't have a closed system like the NMLS, how do you do that as a producer? Do you have some pointers that you can provide to other producers to be in that proactive state?
Right. So I think there is a nature of being proactive and reactive, right? Anytime we've got an obligation, or maybe there's a great pond we want to fish in, we see there's a lot of good business coming from it, and we see consistency, and the owner or the regulators who actually manage that product line, getting to know them is key. Right? It's just about knowing who the partners are. So phone call goes a long way, swinging by an office and actually having that point of conversation. We were looking at the Oregon construction contractor license bond. And so I would go down to the CCB, the regulatory body to do it. And I would meet with them, and I would talk to them, and I would ask them a question about things. And so just understanding, again, a little bit more about the obligation that we are selling. So in the world of production, we're always producing, we're getting product out there. We're trying to figure out who's the buyer of the product. Well, who's going to actually take the product on file? That's another really important aspect of that sales sequence. And I think that as you get to understand it once, what I would encourage to other producers or agency staff members or anybody within the industry, have a couple of wins in your back pocket. What's a great conversation that you had that you can then reference back to? We're talking about a transaction, a niche product, and experience. There's a lot of ambiguity and a lot of unknowns about it. And so if you can create a little bit of understanding and light to those types of transactions and conversations, it goes a long way to earning goodwill and understanding. And so maybe there could be, hey, we're going to interpret this provision to mean X, and that's really negative for you or for your client or for your surety company otherwise. But if you have that relational equity, you might be able to just move it a couple of degrees and say, yeah, you could do that, but here's the ramifications. Here's the implications. If we do this one time, then what it's going to mean down the road. And so the more that you can actually have those wins in your back pocket, or maybe even somebody else who's had those kind of conversations, bring them to the meeting with you, right? And so you take experience A, and then you take those wins over to experience B, and it's almost just like that steamroll or that snowball effect where more positive conversation leads to more positive conversation.
And it seems like bond producers are the perfect people to be having those conversations, since being a bond producer is all about relationships. So it's just another space to build relationships to better the product.
Right, Kat, absolutely. I mean, if you think about it, the principal doesn't know what they're buying most of the time, especially in a commercial obligation. It is simply an obstacle to their path of success. And so they just want to get it like any other insurance product, not realizing that they're putting their name on the line or their personal wealth on the line in many cases. And so if you can come in as a moderator, and you can come in as a risk manager, and you can come in as an educator, that's really the difference between a good producer and an excellent producer. Selling is selling, right? And we all need to sell in order actually to move things along. But if you educate and you advocate and you continue to make the product a better experience for all parties, that's the difference between good and great.
It sounds like also there's a benefit in connecting, yourself as a producer locally, so you can be a resource. So when questions arise, so perhaps you can avert a misunderstanding about a customer practice in the industry. Have you had any situations recently where you had the opportunity to kind of re-educate and avert kind of a misunderstanding when it came to a commercial surety product?
Right. Great question, Mark. I mentioned, 3 years of COVID, the telephone game is really broken down. I think we've seen that significantly in this world of finance. So in the world of money transmission, that industry has become more complex and more sophisticated. And so there was an effort to update the modernization of a number of different old pieces of code and legislation across industry. And so there was a template that was provided out there to be able to adopt it and make it work. And And as that was coming out, some states were now, again, that telephone game had eroded their understanding of what the product was. So we were engaging with a couple of different state regulators, and one was Alaska. So this wasn't preemptive, it was reactive. But what we saw was correspondence coming from a number of our different clients that were saying, hey, this cancellation, it means this. And all of a sudden, we know a cancellation provision to require a set amount of time based on code, regulation, statutes, provisions, some kind of a law that's in place to then allow a replacement for the product. And so when a cancellation notice was being sent out by to some of our customers based on industry changes, so not eligibility of the principal or any kind of deterioration or otherwise, but this whole crypto market, digital asset space and otherwise caused a lot of concern. Right. So now you got a cancellation notice that's going out to the regulator, and the regulator takes that notice and says, we're stopping your license tomorrow. If you can't get us a new surety product, your license is suspended. Wow. That's the worst game of telephone I've ever heard, right? Now you've got license. Their entire business plan is at jeopardy, right? And they could be out of compliance now because they had less than 48 hours to get a new product in place. That's not the provision. That's not the same perspective. We look at the notification provision and saying that gives us 30 to 60 days, depending on the obligation, to get a replacement product in. Right. And so engaging with the regulator and saying, hey, tell me more about, these are your laws. These are your statutes. When you read this, what does this mean to you? Mm-hmm. And so it's, I will say a couple of things. Perspective, if you can understand the perspective of others, I swear you get another 50 points of IQ. The second thing is if you have a little bit of curiosity in your engagement, you can go a lot further in trying to find a solution that's a win for all parties. If I would have come in hard and fast and said, you idiots, what are you doing? Your provisions say 60 days. You're breaking your own laws over here. You can't do X and Y and Z. But if you can have that spirit of curiosity and say, tell me a little bit more. What does this mean? Now, what happens if you freeze their license? This is a company who has a digital platform that's transacting funds online on a daily basis. How are they supposed to stop in Alaska in 48 hours? What would that look like?
Right. Well, I mean, I love that because, producers always, they enjoy being a solution provider for their clients. Mm-hmm. But you also can be a solution provider for the obligee, right? I mean, that's Absolutely. What you're saying. By listening to hear what they, what's of great interest to them, and so they can understand the situation and frame out how it can be a win for them as well, then you're doing a good turn for not only your client, but the product itself, right? I'm sure you have additional stories like that as well.
Yeah, you bet, Mark. So again, kind of picking on that industry because there's been so much change. I mentioned, we do quite a bit of support within the crypto arena, that digital asset transmission. That's a new product line. So it's not like this, 30-year-old, 50-year-old product. The Western unions have really changed. It's Venmos, it's PayPal's, it's Apple Pay, right? We're paying with things on our phone now, and we're not going to the bank. We're not wiring funds across the, country borders or otherwise. And so things move so fast. And as these types of things are moving, what we also saw was some collapse of banks, right? So when we saw Silicon Valley Bank, or when we saw some of these financial institutions close all of a sudden, we saw a run on banks, right? Now there's this concern and confusion. What happens? Well, we had this implosion of FTX. What if there's a run on surety bonds? And so I kind of mentioned that earlier, have a win in your back pocket. This wasn't necessarily a win, but it was something that everybody was very familiar with. We saw how three banks closed so quickly because of public attitude. Well, what's going to happen to our surety product if the obligees make a run on the products because they don't know? And again, it's that perspective. Well, what's the obligation? What is it meant to do? We don't really know. Maybe we should just make a claim on it just in case. What would be the domino effect of that happening? And so we actually, myself and a couple other team members within Gallagher, have been working really closely with regulators since that NMLS conference. And we got to join a MTRA call, so the Money Transmitter Regulation Association. It was an all states call, and we got to talk about that. What would it look like? We just saw 3 banks collapse, and what a ripple that caused throughout the entire economic sector. Well, now we got FDIC bonds. Uh-oh. Those have been bonds that are written pretty freely, at very low cost, and the amount of liability that's out there. What happens if we start seeing claims on FDIC bonds? that it could be catastrophic, right?
Right.
So across the board, we started to look at other situations to try and educate, to try and advocate, to try and actually empower people in their decision making, and to take away some of the mysteries as they engage through this product. And we saw great changes. Again, when we were at the conference, the NMLS conference that happened in February timeframe, February or March of 23, we saw some new bonds come up. Louisiana created a new obligation, a virtual currency obligation. That bond started at $1.5 million and went to $7 million for Louisiana.
Wow.
What's the product? What is it meant to do? Why in the world do you need a $7 million bond for virtual currency licenses in New Orleans?
Right.
It just now we are at a juxtaposition where we're not seeing eye to eye. This is an insurance product. And you know how many people are going to be able to get that bond? Like none. And if you multiply that by 40 states, by 50 states or otherwise, all of a sudden the number of eligible licensees that can practice in your jurisdiction is like less than 1%. Is that really what you want to create? No, not at all. But nobody amassed that different information. That's the producer's job. Take your stories from all the neighboring obligees. Take your stories from all the customers that you represent, aggregate them together and cast that narrative to educate, to empower, to improve.
Right. And I think you struck on something. There's probably were the best of intentions on whoever was framing that statute and that obligation. But again, there maybe wasn't a discourse with industry. Perhaps they didn't know who to turn to. But if maybe they had resources there and an initial contact, then it could have been framed better. And,
Absolutely. Absolutely, Mark. And I think, it almost goes back to, I think about my middle school kid, and he's like, do you know how much homework I get? And it's like my teacher, now that my other teachers are also giving me homework, it's operating in this vacuum. It's the same thing, right? And so one obligee says, we want a contract that is really good for us. Really erroneous bond provisions, really erroneous limits, really far reaching in the extent. Oh, wait, if any of my peers do this too, we've collapsed industry. Yeah. We've killed it. Like nobody can now operate in this space because it's so myopic and so one-sided over here. And so I think that you great point, Mark. We want to actually show that we are not judgmental in the surety industry. We are problem solvers. We come alongside and we support. We want to educate. So let us help you draft some of these things. Let's get to the legislature before it's put out for vote, right? Let's try and revise the statutes before all of a sudden we're done, and it's going to take another session and an act of God to be able to change what you just wrote. Right. So you're exactly right. We want to be seen as those people who help rather than just judge in that stance.
And it sounds like you're talking about moving from being just reactive to what's going on, but proactive and making sure that information gets out there in advance. What are some good ways that you've been able to be proactive in working with regulators?
That's tough, Kat. I feel like a lot of times it is almost, again, like a wildfire. You have this conversation and all of a sudden it starts to spread and somebody says, hey, you need to talk to so-and-so, right? And so now you're getting more preemptively. And so when we had that conversation that happened at the NMLS conference, that was open information. It was for everybody to hear. The number of regulators that reached out to us after the fact who are now in this modernization attempt, who are actually looking at their bond penalties, but it hadn't yet been put into play. We saw a number of states that were going to have bond penalties increase 500 to 1,000%. Right?
Oh, wow. Yeah.
Imagine what that would do. Well, we got to talk to them beforehand, and now we saw moderate improvements because we look at the overall loss history that's over here. It's not like they've had industry losses. So we're not increasing bond penalties because of losses or damages done to participants within jurisdictions. We're not saying increases because of compliance issues with different licensees and such. So I think to be proactive, I think that there are some great things you can do as it relates to social media is very connected right now. So you can actually make commentary online about some of those wins. And I think, again, it's about sharing that success story. Fear drives movement, fear drives action, but same thing with positive, right? So when you have a good win over there and you're able to broadcast and kind of share that with other parties. And I think it's also about understanding the domain of where we want to play in, Kat. I mentioned, the pond that you want to fish in, right? Mm-hmm. Know those actors. Be proactive and actually engaging to the people who might be decision makers or influencers within that space. I'm still working on a white paper. I talked to Mark about this one a while ago. It's still in the draft form, but I'm working on that white paper to try and continue to educate, to empower, and to be more proactive in getting some of this information collected and writing that narrative that helps to protect product, protect industry, and promote what we're doing within the surety side of things.
It sounds like also you've been able to identify like associations of regulators in certain areas or fields, and that may be a fruitful avenue. Is that true?
Yeah, absolutely, Mark. Great point on that one. If you know the pond that you want to play in, hopefully those actors are also talking, right? So before NMLS was really created, I don't feel like state regulators talked well at all. And it was only through that session or through that event that now all these parties started to get together. Well, now there's other groups that are doing a much better job of communicating. What about maybe you support the construction industry like so many of our practitioners? Are there any kind of association where these regulators or owners are coming together and they're having these joint meetings? What's the best practice for contract provisions in 24 and 25? What's the best practice for these kind of things to happen? So taking your industry knowledge and expertise, adding value to those meetings and saying, hey, can we come in? Can we share some of what we've seen within the industry? Can we share some of the experiences that were really negative over here that we want to learn from on a go forward basis? Because a lot of times when we make a bad goof, we don't really want people to know about it. I'm embarrassed. I just totally screwed up. Why would I ever showcase that to anybody else? But there's a lot to be learned from it, right? So if I can take my goof over here and I can bring it into play in a way that is comfortable and it's going to be positive and affirming to try and learn and grow others, now we've kind of taken the perspective and we've taken that curiosity element to bear, and we're now improving the overall experience. So I think that anytime you can see overlap or synergies in the associations, just like you said, Mark, and bring those experiences to bear, it might be that somebody's too insecure to ask the question. I was hired to do this. Now they are going to learn I don't know what I'm doing or what I'm talking about, or I've never done this before. And so if you can come in and provide that level of support without making somebody feel like a fool or they're incompetent in their profession or what they're supposed to do for their responsibilities, now it's just an empowering conversation. And I think that gets you a lot of yardage out of your efforts.
And coming in understanding that, we always say surety is a well-hidden secret. We don't want it to be a secret, but it seems to be. They're not alone in not really knowing much about the surety industry or the surety product. So seeking out that information is probably a good way for them to make sure that their intent is the way their decision is playing out. Would you say?
Yeah, absolutely. Absolutely. And I think that as we look to it, the more information you can have out there. So if you're looking at your own personal career or otherwise, if you can put your thoughts on paper in a professional manner that can then be found by others, that can actually be a great way to discuss it. If you can be part of forums of communication, right? Maybe there's a moderation panel. Maybe there's other Q&As. Maybe there's an RFP that's going into play. So working with different participants along the way for some of these things to be drafted and created is a great way to be able to get out there. Again, it feels like we're all online these days. So using a medium that's actually going to be appropriate for those types of conversations, LinkedIn, being able to post different things that are on there, whether it's a white paper or successes or otherwise. More of these platforms are expanding in the services that they can offer and showcasing maybe some support or some solutions you've brought to bear in the past. I think one thing to play, though, is use the right medium with the right kind of consistent communication. Because if you're all over the place and your LinkedIn is a place for you to share about all these other kind of things as well, it's probably going to be quickly overlooked if you're trying to add content of that type of value. So staying consistent with your theme and communication and the modes and mediums of what you want to share and how you want to share it, I think is going to be really important.
And you've shared a lot of advice for bond producers who are working with state agencies and how they can do that and reach out and be proactive in that space. If you could say something to anyone from a state agency that might be listening into this podcast, what would you like to say to them?
Hey, we're here for you. We are in partnership with you, really, at the end of the day. If the product that you create is too adverse, we can never sell it. And at the same time, we want to work with you to make sure you're getting the product that you think you have. Right? It's a horrible experience if you think you have a guarantee of A and it turns out it's blue. So that's not going to bring anybody the same perspective on that one. So I think to the regulators, we'd love to have those kind of conversations. We want to take those stories of success and those stories of failure, maybe redact some of the sensitive or awkward information that's there, but bring them to bear so that we can actually create a product, create an experience that's going to be beneficial to all parties. right? The surety product, when used, is a beautiful, beautiful thing. It's a great guarantee to provide confidence to the owner and regulators, to protect what they're trying to do, and to bring in somebody with a solvent balance sheet to take care of it if it fails. But as soon as we miss the perspective about what we're trying to achieve, that's when I feel like the failures can really start to present themselves. And maybe the product gets a bad name. Yeah, the surety company never pays, right? Or maybe the producer gets a bad name. They misrepresented information over here. Or maybe the obligee gets a bad name because we thought we were guaranteeing A, and then all of a sudden we had to guarantee red. And that doesn't feel fair, right? So I think that for any regulatory bodies that are out there, we want to work with you. We aren't that scary. We want to come together and to bring things to bear that are going to be a solution for all.
That's terrific. Well, Corban, it's been great talking to you about this today. Hopefully we can have you back again sometime.
Hey, thanks so much, Kat, for having me. It was a pleasure to be on with you guys this afternoon.
You've been listening to Let's Get Surety, brought to you by the National Association of Surety Bond Producers. For more information about the NASBP and its members, visit nasbp.org.
Before we go, we just wanted to thank Liberty Mutual Surety again for their generous support in supporting this episode of Let's Get Surety. Liberty Mutual Surety provides contract and commercial bonds for all size companies and contractors around the world. Liberty Mutual is here for you today, tomorrow, together. For more information on Liberty Mutual's breadth of surety products and solutions, visit www.libertymutualsurety.com.